Okay, so what we'll be doing here is transferring from the transaction analysis table over to the general ledger, taking you through that process. So the first step in the process, so I'll do that for these two transactions. Okay, so one with 2 accounts and one with 4 accounts. So first off, we have on the 5th of September, inventories and accounts payable. Inventories being debit and accounts payable credit. So it looks like we purchased inventories on credit. So I'm going to go to these are like little signposts for us to go to. So I'm going to go to the inventories account, and on debit side, I'm going to write $5,400. So I've already got a transaction here, just to see how we go. Okay, so $5,400. I'm going to write the 5th of September over this side. In the particulars column, I'm going to write how I paid for it, which will be accounts payable. Normally you just write the other account that's involved in the transaction. The balance is a running balance. It will change. It'll go up and down depending if we're buying or selling inventories. In this case here, it's a debit balance. It was originally in here. I've got another debit balance, so I'm going to add them together. If it was credit, I'd subtract. So I'm going to add both these together, and it should get about 8,400. And it's debit because there's more money on the debit side. I haven't finished yet on this transaction, so the next stage is to record the other side there, because every debit and credit must be recorded. So now I'm going to go to the accounts payable account, and on the credit side, I'm going to record $5,400 because it tells me accounts payable account $5,400. Write the dating, 5th of September. In the particulars, I'm going to write what I was purchasing with the item there, or the other account in the transaction, which is your inventories. So the inventories. The balance, since it's only one item in here, it's going to be $5,400. That's how much in total we owe. More money is on the credit side. So I'm going to write credit. So I finished this transaction. It is 2 account transaction transfer to the general ledger. Now I'm going to record these 4 accounts. So best off, you treat them as 2 separate accounts in this case here. So bank and sales, and cost of goods sold and inventory. So first off, I'm going to go to the bank account. Same process again. Debit side, write $3,800. So bank account, on the debit side, I'll record $3,800. This is on the 12th of September. I'm going to record what I was purchasing, why this transaction was occurring, or the other account involved in the transaction, which is sales. My account now will, the balance column, since I've got a debit balance here, and I've already got a debit balance here, $12,000 debit, I'm going to add them both together to keep this balance going. So it'd be $15,800 in my bank account. More money is on the debit side than there is on the credit. Recorded this one in. Next one, sales. So now I'll go over to my sales account, which is just here. It's on the 12th of September. So on the credit side, I'm going to record the amount of $3,800. In the balance column, it will be $3,800 because that's all that's in the account, and more money is on the credit side. The sales, I'm going to record how I received the money, or the other amount that's left in that account, which is the bank account. which is the other account recording. Last two here, we'll record in there. So go to the cost of goods sold account on the $2,000 on the cost on this account side. This is an expense account, so it's also on the 12th of September. And it's important to record this transaction simply because we don't want to overstate the profit that we are making on this. We need to recognise that these goods cost us some money. And so it's an expense account for $2,000. And going to be balance of 2,000. There's going to be more money on the debit side. Last part, it's very important we don't miss transactions here, don't miss lines, so I just tick them off as I go. It makes it a little bit easier so I can recognise it. 12. This account here, and go into the inventories account, and on the credit side, write $2,000. This is cost of goods sold. I'll just press the equals key. It will save me typing it out again. So here at this time, we have a credit in this account. So already we have a debit balance, 8,400, and I've got a credit here. So I've got to subtract them from each other. I also need to think about the transaction. I'm selling inventory, so naturally I'm going to lose inventory out of this. So my total inventory will be decreasing. So I need to decrease my inventory, or the worth of my inventory, which is now down to 6,400. More money is on the debit side than the credit side, so it will be debit. More money on the debit side, so 6,400. I go through and I check it off.